the fate of this rally, whether it's too extended to continue or whether it's just getting started. Opinions differ on that question, as you know, so let's ask Cameron Dawson, Chief Investment Officer for New Edge Wealth. She's right back with us at Post 9. Boy, what a difference. Good to see you again. What a difference a week makes.
Yeah.
We're thinking that, the whole thing's in danger of breaking down. And I know you're laughing because it's kind of remarkable, the turnaround that we've seen. Last week, we went 4 for 4 on everything that had to happen for the Bulls. And here we are. What now?
Yeah, we went from that very deeply oversold level back a couple Fridays ago to now being not quite overbought yet, but getting close to that territory. We think we're in a really important pivotal point for the S&P. You're right about to hit 4,400. That's your 100-day moving average. That's also the downsloping line that we've been in this sort of mini downtrend since August. If we get above that 4,400, I think the question is, does that spark a chase rally into year end, kind of give the green light to have that proper Santa Claus rally?
Okay, so you're not convinced yet?
No. I think we really have to judge it as we hit that resistance. It is interesting to see things like small caps and high beta sit out today. Those have been areas that, in order to see a more sustained rally, we would like to see them participate.
I mean, they participated last week. They're up like 8% a week or more, like 10% in 1 week.
And yet we're seeing things like cyclicals show signs of weakness, the materials, energy, industrials not really participating. So we're back to a very narrow market, but it's narrow markets in things that can pull us higher because it's tech, it's communication services. These are huge weights in the index.
But I know, but why? See, I asked this question earlier, too. Why would you take the risk of owning a cyclical stock in an environment where the economy is obviously slowing, rates are still elevated, when you can say, okay, I'll go mega tech, I'll just go down the mega cap valuation spectrum to a Meta, maybe, or a Google, Alphabet, rather than take the risk on an industrial name because it's so cyclically tied to the economy?
I think it is a very good point. And late cycle, we typically see large cap growth outperform. It's so prototypical of being late cycle. I think the risk that you have going into 2024 is that if those areas are crowded, if expectations are high, do you see a leadership rotation? But I think through the end of the year, why would you sell your mega cap? Because A, you want to show that you own it for window dressing at the end of the year, but B, why would you take the tax gain today?
Well, Jonathan Krinsky of BTIG is a technician, and we talk to him often. He has a note. He's talking about this 9% move in 8 sessions out of the NASDAQ. Remember, today we're going for 8 in a row, which would be the longest streak in some 2 years. He says he expects the rally to fizzle within the next day or two, if not today. It certainly doesn't look like it's ready to fizzle. What do you think?
Look, I think, again, it's that 4,400 level. If we can break through that, then that could be the thing that pulls positioning to be from what is now neutral to being overweight. Positioning helps and seasonality helps. That's, if you're a bull, what you have to count on. If we don't break through 4,400, then we're continuing in this sideways chop. You kind of go through this churn period yet again.
1 week. I said I was going to mention these gains. Apple up 6.5% in a week. Microsoft 7, Alphabet 6, Amazon 7.5. Nvidia reports earnings, ahead. That's going to be an interesting moment. That stock's up 13%. Meta's up 6.5% in a week, and Tesla, which had broken down, has now rallied back almost 10%. Those moves are astounding, which is why, some people take pause. Others, as I suggest, look at that and say that the end-of-year rally is totally intact. Why wouldn't? Rates have come down, and we think the Fed's done. The amount by which the 10-year note yield came down was like 50 basis points in a few days, it feels like.
Yeah, and that was an area where we were deeply oversold in bonds. Now we're back at support. I think just as 4,400 is important for the S&P, 4.5% is really important for the 10-year Treasury. And if it breaks down, maybe that gives you even more room to be able to relieve multiples. They're sitting now at about 18.5 times for the S&P, so maybe you can get up to 19 times. I think the other important point is that tech is now back at a relative high versus the market. So for all of our consternation about interest rates and valuations, tech has not cared at all and is now at a new relative high compared to even above where we were in July.